Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Holhouse. So I'm sure by now that you've seen that there is chaos in the markets. So starting over in Japan and Asia, across Europe and into America today, we're seeing a pretty massive correction happening. Now, there were people saying that, okay, it's going to be Black Monday, it's going to be the Great Depression 2.0. But if you look at what's happening today, yes, it's not good, but it's not at that level yet. Right now, a lot of the experts that I've studied and I've talked to are saying that, don't worry, folks, it's coming, and that they're trying to hold back an absolute crash until Trump gets into office, right? So that way he could be the person that steps in and all of a sudden everything goes completely haywire. Of course, they don't want to have this happen with, Harris being the person that they're expecting to come out and talk about what's happening with the markets. And you've seen her comments. And if you watch her comments on inflation, it's not good, right? It doesn't really inspire confidence in the American voter. So obviously there's a lot to unpack with why this is happening, what's happening to the crypto market, how it affects the metals, so the prices of metals, et cetera. But the number one most concerning thing to me in all of this is, I'll pull up for you right here, is this right here. Okay, this is a tweet from Raw Alerts. Breaking: multiple brokerages, including Charles Schwab, Fidelity, Vanguard, TD Ameritrade, E-Trade, UPS, CenturyLink, and Interactive Brokers, are currently down and reporting errors amid market crashes. So this is like, okay, let's just say that one of these goes out. Let's just say Fidelity. Let's say Fidelity doesn't really have a strong, servers, and when there's a crash, they can't handle it. They have to shut their app down. Maybe I could see one, but the fact that it's across all of these, right, that all of these platforms go down, to me, this is the real story, right? Because the story is not, okay, hey, we saw a 5 or 10% drop and Nvidia's down and Apple's not doing so great and there's Buffett. Of course, that's the story. But to me, this is what it is. This is it, right? Think about this push that they're making towards a central bank digital currency. Think about the push they're making towards the digitalization of everything. So what concerns me is, imagine that you're somebody, maybe this is you, right? That you're watching what's happening over the weekend. You're seeing what's happening to Bitcoin. You're entering into Monday morning and you're thinking, okay, hey, like I need to really pull some money. I need to move some money around. I'm going to pull out of Apple, whatever it is. And you go online to do that, and it says, sorry, you can't access your money. And folks, this is exactly what I've been warning about for so long. And this is the big reason why, for me, it's all about holding your assets, right? Because when our assets are in a digital location like this is what can happen, right? Maybe you saw my interview with David Webb, or you've read or you've watched The Great Taking. It talks about this, is that if your assets are sitting, okay, right here, let's say in Fidelity or say Ameritrade, if your life saving is sitting in an IRA in Ameritrade, and something happens like this, or say it's not, just using it for your stockbroking on E-Trade, and something happens and they turn a switch off, and you can no longer even access your own assets. The question is it even yours? And to me, the answer is no, it's not. Because at that moment, it's theirs. If it's mine, I can take possession of it, right? If I have a car and I lend it to somebody and they lock it in their garage and they go on vacation for a month, and I lose access to it, it's like, is it my car? Well, you could say it's my car, but then if you watch David Webb's The Great Taking, you realize is that they've actually claimed it anyway, and that if you don't do something right, they're going to sell your car because they own it anyway, which is a whole different story. But to me, this is what's really concerning, is that everyone's accounts got turned off. Right now, of course, they could say it was an accident. You could also say that they did it to prevent some sort of bank run type scenario, like they didn't want to create a panic selling of assets because for whatever reason. But it's like, I don't care, right? Like this is my money. Like this is my money. If like, I'll pull up in our chart for you. If the volatility index is skyrocketing, right? So here's a tweet. This is from the Kobesi report says the volatility index VIX is now trading above 65, a level only seen 2 previous times in history. The only 2 times the VIX has traded above 65 were in the 2020 pandemic and the 2008 financial crash. Says this puts the VIX up a whopping 550% from its July 2024 lows. As a result, the S&P 500 has now erased $5 trillion of market cap over the last month. Buckle up. I mean, look at this. If this is a graph showing volatility, that's not good, right? We don't want volatility in the markets. So there's so much to, so many questions that I have, right? What's the bigger picture of this? Okay, how are they going to fix it? Are they going to lower rates and start just printing a bunch more money? Because that's not good either. I mean, look at the prices. The price of a fast food meal or your groceries is already skyrocketing. And what happens is they just keep dumping more money into the market. It's like you've got a balloon that you're blowing up. It's about to pop. And like, okay, well, the solution is to keep blowing up more air into it. It just doesn't make sense. And so joining us to help make sense of this is my good friend, Collin Plume. He's the CEO of Noble Gold and Investments. He understands this market inside and out. So we're going to be diving into a lot of what this looks like, what's causing it, what the future is, what happens if they lower rates, for instance, what happens if they put more money, they increase the M2 money supply, et cetera. So just to help make sense of this. So folks, please enjoy the interview with Collin Plume. Collin, thank you so much for joining us today. It's great to have you on the show.
Thanks, Seth. Good to be here.
Absolutely. So, we had planned to have the show before the insanity of what's happened this past week or so. So it's interesting timing that we had been planning to do a financial show when just the craziness has unfolded. So right. I'm going to start just to kind of set the stage for our discussion today with I think it's like a 30-second video from Fox from this morning, just to recap of some things happening. And this will help just kind of get things going for us. So here, it's 29 seconds.
Some would call history in the making. Scary. Don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
Is that true?
That is true.
Okay. Down 6% right from the get-go. This is heavy big tech. Here we go. Look at them go down. Microsoft is down $20. That's 5%. Alphabet, 5%. Meta, 6%. Amazon, 6%. Apple, 9% down. Let's pull out Apple. This is interesting. A question for you, some would call history.
So just a small recap. So obviously we had the Japanese stock market crash. I think the Taiwanese stock market has experienced a historical, a kind of one-day loss. South Korea as well, and it's rippling everywhere. So I guess, starting off, like what's your overall assessment of just the global markets?
Yeah, well, I mean, I think it started last week with the U.S. job report coming out. We added 114,000 jobs, give or take, and we were anticipating 175,000 jobs. So, and the Fed, a month before met about interest rates and sort of alluded that they're worried about unemployment. And so you saw that really negative job report come out. And then the Japanese market had a big collapse over the weekend. And really what it had to do with is that, Japan decided to raise interest rates. And so it was the first time they've done that in many years. And that sort of had a negative effect to the stock market, because a lot of people, what they've been doing has been borrowing money in the Japanese market at basically 0%. And then they'd go over and buy the dollar or other very safe assets and make a spread, on that money. And it was very secure, and they were running this for a long time. Well, once Japan decided to raise rates, it put them into a difficult position. So a lot of people were trying to get out quick. And you do see this happen over the weekends where you see markets move heavy. It happens in the precious metals business, stock market, but massive sell-offs. So everything is basically down today, and it's caused a lot of concern for investors. Now, your everyday investor, maybe who's not day trading or taking advantage of these things, they're going to miss it. But I'm sure when they open up their 401k today, they saw some pretty surprising numbers.
Yeah, what's interesting is that for a lot of people, this is how it works, right? They open they open up today, they're like, oh, Apple's down X%. Then you look at, I think it was just last week that Warren Buffett pulled out like a significant part of his holdings in Apple. And it's like, it makes you wonder. It's almost like watching Nancy Pelosi. She's a big tech stock investment. Then, oh, wow, there's a new chip factory opening up. It just makes you wonder. Yeah. It's like, all of us are on the outside. And you mentioned, the retail investor. And I think something that's also just crazy about this. I'll pull up here. I've got this is a tweet I want to show. So basically all the retail, not all, but so many of the big retail trading platforms were experiencing outages, right? And this is what concerns me more than anything, because when I look at this stuff happening, I'm really thinking about the average person in America, right? If these, if the Warren Buffetts, the George Soroses, or if they have 20% loss, it's like, okay, good. It's less money for funding like the collapse of the country, right? But when I think about what happens to the average retail investor, the person that is trusting their Vanguard or their Fidelity advisor, and they can't access this information, like, this is almost criminal. So here's this tweet from Mario Nawfal, who says reports indicate that several major retail trading platforms are currently experiencing outages, including Charles Schwab, Ameritrade, Vanguard, E-Trade, and Fidelity. Like, I see that, and that's just, the list goes on. Like, to me, it makes me think that's the same thing as a major move happening. And say I'm banking with Chase or TD or whatever, and I go to say I want to go move money from one account to the other, and my app just won't work. Like, I'd be freaking out. And I think that this shows us, though, that like when something is in the digital realm, it's actually not ours. I mean, what are your thoughts though on that?
Yeah, well, I mean, so CrowdStrike, happened a few weeks ago, where there was all these companies that they said there was 29,000, companies that were affected by CrowdStrike, and you couldn't wire from the banks. You couldn't, airlines were affected. So it's interesting timing that happened, and people started to realize, like, oh, okay, I don't have as much control over my funds as I once thought, because some simple, company that handles the back end of a computer was able to bring down a whole system. And the amount of people that were affected by that were pretty tremendous. So you had that happen a few weeks ago, and it gave people some pause, like, okay, maybe I don't have control over my assets as well as I thought, because in the digital world, there's always a system that can go down, and that's scary. And then you have this situation happen where, how could all of these massive exchanges all go down at the same time? So in my opinion, I think I like to get into specifics on things like this, because why would they all go down at the same time, in terms of they obviously shut it down themselves, right? Because there's no way that they can't handle the demand, right? They can handle that many people going on, because when the stock market goes up, there's a huge demand. People love to buy things when they're going up. Well, it's interesting, when it's going up, we've never had any issues, but when we're having a collapse of the Japanese stock market, and we've had this collapse starting since last Friday, they didn't give people an opportunity to make trades. There was a lot of profit, and it's because when things are going down, they wanted to slow things down, right? They don't want a continuous amount of selling, and so it creates a situation where it's not a fair system, that traditional traders just couldn't get in over this and be able to liquidate or short or do whatever they need to do. And it shows that they are manipulating the system. It's not, no one can tell me, like, this is just an outage, because first of all, they haven't confirmed that there was any system that did this. And I know for a fact that they can control the amount of people, like, to break it down simply, when you start your first website, you can get a system that can only control a certain amount of people on it. Well, I don't think Fidelity's got that issue, right? They don't have an issue where millions of people can't go on their site. Of course, they can handle that traffic. So they must have shut it down, unless something comes out otherwise and says that they didn't. And so they're trying to slow down the amount of selling, and I think that creates an unfair advantage. And I think that's frustrating for everyday investors like us.
Well, it also, reminds me of bank runs, right? I mean, imagine that, and I know that there's been discussion about this, with some different meetings that they've had at the very kind of higher levels, the Fed level, et cetera. But it's almost like when, let's just say that they start seeing bank runs popping off, and all of a sudden you can't go pull money out of the ATM, or you can't go, or they put a limit, right? Like the government steps in and says, well, you can only withdraw $1,000 a day because we're going to prevent bank runs, which it's like, okay, that might prevent the run, right? You could see how that could, but at the same point, it's like, well, if I'm putting my life savings into a Chase account, hypothetically, and now I see that there's grave concern about the fact that, we know how little the FDIC actually has, funding for coverage versus how many assets are sitting in, what they're supposed to be covering, right? It's insane that they would say, well, you can't access your money because it's for the good of the people. It's almost like it's communist, right? It's like them stepping in and doing price controls and everything.
Yeah, and it all comes down to the idea that what do you really control out of your finances? What do you actually own by yourself? And it's the same idea that you have these these policies that are coming out that they don't want you to own anything. The World Economic Forum came out with a video about a year and a half ago where they were talking about the top 10 ways that you can just rent everything in your life. And so these ideas, I think when you see what happened with CrowdStrike, and then you see this morning waking up and you can't actually make trades with your, and a lot of people have a lot of their net worth tied up in the stock market. The fact that you can't move and sell as quickly as you want, you sort of realize that you are at the whim of the platform that you're on, unfortunately, or the bank that you're in. And so it does, all these things happening at the same time, it does sort of make you believe that, wow, I can't trust everything. And I'm not saying that you shouldn't have some money in the stock market, because a lot of people do, and they've done very well there. And that's not what I'm saying at all. I'm just saying, like, you can't have full faith and confidence that you're going to have access to those funds when you need it. And I think over the last few years, the stock market's at a higher point now, but a lot of the gains in the NASDAQ that we've seen have been wiped away over the last 2 to 3 weeks, since a lot of the gains are basically in top 7 companies, NVIDIA and Apple. And you were talking about Warren Buffett. So the two biggest things, so Warren Buffett sold Apple stock, which he had a huge holding. And then the second thing that he sold, which is the second biggest holding, was Bank of America, and he's basically been divesting most of his money in banks. He doesn't have confidence in the banking system right now, which is sort of interesting from his perspective, that he always says, as things go up and down, that we're the greatest economy in the world and that you should trust. And he always tells people to trust. But then if you look at, Berkshire, they're sitting with a massive amount of cash. So if he's really telling people to trust the system, then what is he doing? And so anyways, I think it's, a lot of times, these big, someone like him can really move the market. So he obviously is going to always tell people to keep their money there, and keep it in their 401ks and keep it safe. But ultimately what he's doing is quite the opposite right now. So I think he thinks there's a correction, and so he wants to be ready with cash, right? So that would be my guess, because a company like Berkshire, they don't want to be in cash. They want to be invested. They need to make a return. So it is interesting that he's sort of taking this position and moving away from the banks. And I think that's, he sees what's happening. If you look at every betting exchange that's out there, they say between a 90 and 100% chance that the Fed drops rates in September. Whether they drop it 0.25% or 50 basis points, like nobody knows, but it looks pretty likely that they're going to do that. And so that's going to have a pretty big effect, because money's going to get a little cheaper. And so a lot of these big investors are preparing for that.
And that leads me to the next question in terms of how the Fed will kind of deal with this, right? Because obviously when these things happen, you said, the Japanese stock market crashes, and you have the other markets and Asian markets, following a similar line. If I was Jerome Powell, you're looking, okay, how can we keep this from coming in here and doing the exact same in America, right? How do we prevent Great Depression 2.0? And so, for one, it's kind of pumping liquidity, right? So printing a bunch of money, but also lowering rates. But we've been battling inflation, which they tell us that inflation's in check. It's like, well, go to Five Guys and get a burger and tell me inflation's 8%, right? Like we all know that they're completely lying to us. We're almost into hyperinflation. If you look at the prices that groceries and stuff are, it's insane. So how do you think it all fits together? Like what happens if they lower rates and they start printing even more money to inject more liquidity in the market? Because I just feel like that they've been blowing this balloon up or kicking the can down the road for so long that it's almost at the end of what can happen. What do you think though?
Well, it's interesting with food. I was talking to my son's going to be 8 in a few weeks, and I was talking to him about what's going on with McDonald's, and I try to talk to him about money and how McDonald's now wants to bring back this $5.99 meal. I don't know if you saw this about a month ago, but because they can't afford a McDonald's because a meal now is like $17, $18 because a lot of places the wages have gone up, the food has gone up, it's just gotten so expensive. So I was trying to explain to him about like and I was explaining to him that, yeah, I mean, like when my father you could get a McDonald's hamburger for a quarter. Now, a hamburger could be $8 or $10. If you go to like a nicer restaurant, it could be $15 or $20. And his mind was exploding. Like he's like, and I was showing him money and he was like, so it was really interesting to see, a young child sort of understand inflation and get an idea of that. So I think that the food costs have really skyrocketed. I think that's just overall our cost, which is part of, I think what Trump's idea of focusing on tariffs is to bring, tariffs on face value do make things more expensive. So let's not deny that. But the idea is that ultimately, like if we're buying things that are made here, if we make our goods competitive with goods that are made in other places, that we keep the money here, right? We bring jobs back here. And I think that's one of the things that he's really focused on is bringing more jobs so that we don't run into a situation like we did during COVID, where we were so dependent and we couldn't get any of the things that we need. We don't want to be in that situation anymore. We want to be able to produce our own goods. But I think what's going to happen for the rest of this year is I think that they have to lower rates because unemployment's starting to creep up. So that's the first thing that Powell's looking at. And then the second thing is the banking situation. I think that you have medium banks, mid-sized banks, they have so much commercial debt on the books. The residential homeowner market is so slow right now. They're not doing loans. They need to get more liquidity. And so they need to lower rates to kind of spur the economy a little. Banks have been really in trouble for the last few years. I mean, that's why Warren Buffett sold Bank of America. They're really struggling right now in this economy. So, they raise rates really fast. And now we're at a point where like the economy's stalled. So they're going to try to pull it back a little bit. But the Fed has this inflation that they really have to be careful of. So it's a very difficult situation. I think a lot of it comes down to is the big problem in the US is we're $35 trillion in debt. And so, we're always going to have countries that are losing faith in our currency and they don't feel comfortable investing here. But ultimately, I think the Fed and what's going to happen is we have to open up the money supply, and they're going to do that, I think, the third or fourth quarter this year. So, the dollar is going to lose some value. They're going to open things up, which will help the banks in certain sectors, but it won't help the dollar. It'll hurt the dollar. It'll hurt some assets too. But I don't think it necessarily fixes our inflation problem. And some assets will perform really well in that environment.
And so in terms of correction, looking at like, Martin Armstrong is one of my favorite guests I have on somewhat regularly to talk about cycles, and whether it's him or Charles Nenner, there's a lot of folks that are saying that basically like we're kind of heading towards the mother of all bubbles being popped, right? Whereas in 2008, 2009, it was the housing market, right? It was the trash loans that were kept being repackaged and which
derivative
create exactly. But then where it's like where things are at right now, it's almost like, okay, we're 35 trillion in debt. What are they going to add another 5 trillion in the next year to try to save things? I mean, it's almost like, do you think we're going to get to a point where, like, even looking at the stock market, it's like everyone's like, oh, stock market's great. Well, it's like, well, because they've just been dumping money into it to kind of keep it alive. Right. But at a certain point, that no longer works, and then the correction, like what I'm, folks I'm talking, here you're listening to and talking to, they're saying the correction is going to be like massive, like Great Depression level, wipeout. But what are your thoughts? Folks, you've heard the news. Food factories burned to the ground. Millions of chickens gassed in the name of bird flu. Bill Gates and the CCP buying up farmland like there's no tomorrow. The government's literally paying farmers to slaughter livestock and shut down farms, and bugs are on the menu whether you like it or not. Just think about where this is all headed. Henry Kissinger once said, "Who controls the food supply controls the people." And history is full of stories of tyrants using food to break people's will. Now, you're watching my show, which means you're probably not the type of person that'll bow down to tyranny. But how long can you hold out when your kids are hungry or when you're forced to take a jab to eat? Now, look, I understand you have your own situation and you can only do what you can. But imagine how good you'll feel knowing that you've got a couple of months of food stashed away for when it all hits the fan. And as the old saying goes, it's better to have it and not need it than to need it and not have it. But listen, not all storable foods created equal. So a lot of the big bucket food companies out there use cheap fillers to lower the price per calorie. But in fact, it's during those difficult times when medicine's hard to come by, when clean water is hard to find, perhaps when you're struggling to survive, that's when nutrition matters more than ever. So this is why I recommend Heaven's Harvest. They're a Christian, patriot-owned company that has high-quality storable food that will last for up to 25 years. So folks, don't waste another minute. Go to heavensharvest.com and you use your promo code Seth. You'll save 15% off your entire order. Again, that's heavensharvest.com and promo code Seth to save 15%. Folks, order now before it's too late.
Yeah, I mean, I do think they're going to dump $5 trillion in. I mean, that's basically what we've done. And it makes things seem more valuable, but they really, really aren't. Even them lowering rates, it will give the everyday American feel a little better because their house will probably go up a little bit in value. But what is that real value to them, right? Everybody has to live somewhere at some point. So even if your house goes up a little bit because they drop rates, it doesn't really help you in retirement. You're going to still need to live. Most people want to live their life in their home, right? I mean, they don't. So it doesn't really, having your home go up doesn't really help. So I do think they open it up. And it reminds me a lot of 2008 and 2009 of what's going to happen, I believe, is that they will open things up. They may do quantitative easing again to really, get things cooking and get, businesses going and flood the market with more money. And that was great for precious metals. Gold and silver went, from end of 2008 to 2011. Gold went on a historic, silver went on a big run. So I think items that have a limited supply will always do well in this because we're in essence creating more inflation. So it's been interesting with precious metals because we've hit an all-time high for gold. We're still nowhere near the all-time high for silver, but we haven't had your traditional reasons to hit all-time highs because yes, we've had inflation, but usually when the dollar's been strong. And so the dollar's been strong and gold's been strong. So it's usually the other way. And yet right now, what we've seen is a bull market in gold without your traditional things to happen. So it's quite interesting. And I think that's why a lot of these big companies like Bank of America, these big ones predict, gold at 3,000, 3,500. They're sort of predicting these big ones. So I think it's a 2008, 2009 situation where you have a big pullback and, people, and that's why Buffett's in cash and they pull back and we have some problems for a while until we can figure things out. Because ultimately, if you look at the stock market, a lot of the growth in there is not based on gains. It's just based on momentum and just people buying into the frenzy. Tesla and a lot of these companies, they're not making a lot of money. It's just, there's just been demand. There's just been this hype, this tech hype. It happened in 2000, right before 2001 too. You had this tech hype. So it seems like the tech hype is sort of having issues. And I think we're going to be flooded with money, which will be good for business owners, which will be good. And I think people should be looking to start their own business. They've talked about it more and more, but everyone I know that's growing, even if they have one job, they're having something on the side, some kind of gig job to kind of help them through retirement and have extra income. I was recently in an Uber with a gentleman that had a very successful business and retired, and then his costs really started to go up more than he thought. He had a great plan for his life, and he realized that he's living longer and he's not going to be able to do it. So he was driving Uber and he liked it. And he was driving Uber and he was trying to still invest. He was, 76 years old. And he's still trying to put money in, and he was asking me about investing, which I thought was interesting. So I think people are living longer. People need to understand that Social Security is not a lot of money if it's there when you need it, and so you have to create other ways to protect yourself because I think it's going to be rocky, and you never want to have to sell assets when they're down. And I think if we do have this big reset, you want to have some other assets that perform well and that are liquid. And that's why, gold, silver has always been great because it's liquid and you could sell it anywhere in the world. People will take this anywhere, right? They'll buy it. And then ultimately what we've been talking about the whole time is like, you own this by yourself, right? This is not a share of anything. You're in absolute control, which I think is the one reason that people diversify with this is that they want that extra level of control. They don't want to have all their assets either in a bank or tied up in Fidelity because, there are things that can happen and you might not have access to it the way that you want.
That's a good point. That's actually, I always keep a little stack of silver coins just as that reminder sitting on my desk. It's like, it's in my hand. If I wanted to, I could go bury it in the woods behind my house and they'd never find it. Right. Versus like, I really think that, again, going back into what I showed earlier with all these different sites going down, like that's a precursor of what it looks like under digital currency, right? So, and this is my concern is that the fiat dollar is at the end of its lifespan. The bubble's nearing its end, and they're just kind of waiting for the right timing to pop it, and then problem, reaction, solution, right? So, the problem is this, and the reaction, everyone gets upset. Oh, here's the solution: central bank digital currency, right? And that's my concern because then you get into the social credit score and all privacy is gone. And that is my worry. Cause even though cash, I'm not big on cash long-term because I've been, following de-dollarization a lot. And if you look at what happens towards the end of the life cycles of fiat currency, it's like, the last, 10% you see is exponential, kind of hyperinflation or decrease in value. So while I think it's like, I'd rather have my money sitting in cash than sitting in Apple, right? Like Buffett, for instance, I'm still worried about too many of my assets being stuck in that. And so looking at gold, so I know that there has been, like UBS came out and said that gold could hit 5,000 an ounce. There's been a lot of banks talking about $3,000, $3,500 an ounce. What and it's, I know that no one has a crystal ball, and if you did, you'd be a billionaire, right? And maybe the crystal ball is, George Soros's ability to kind of bet against, countries and then go collapse the countries and make all the money, right? There's your crystal ball. But heading into the turmoil of election and who knows what's going to happen there, what we're already seeing, I think that the reality of these markets is showing itself that in a lot of ways it's a giant Ponzi scheme scam of just loopholes and everything to kind of make money off of someone else's money. Right. Like looking forward into this, entering into this kind of time period, based upon historical data, how do you think precious metals fare amidst this? Because I'm personally looking for ways of taking whatever money I have and putting it into something that will, even if it doesn't double and triple in cost, I just want it to preserve, right? Like I want to just preserve whatever wealth I currently have to make sure that I get through. But how do you think precious metals will react, to over
I think your philosophy is good in that, I always think it's better to be a few months early than a few days late in terms of investing. And so here's what I know is happening on the horizon. We've talked about rates, and unless the Fed goes in a totally different, they're going to lower rates, which means a lot of people are sitting in this cash position at a 4.5. And when they lower rates, obviously that will go down. So that's likely to happen, unless the betting community is wrong, but usually they're right. So I think that's going to happen in September. And then in October, BRICS is meeting. And I think the timing of those two things being back-to-back months is really interesting. So the BRIC nations are meeting in Russia October 22nd and 23rd, and they have on the agenda to discuss a currency. They want to do a gold-backed currency. They've been talking about it for a long time. And I think with them seeing what's happening in our markets, if they feel that and they continue to feel that we're not strong, we lower our rates in September and there's some turmoil, that's going to set a precedent for their meeting October 22nd, 23rd. Ultimately, us, having control and the petrodollar and those big transactions being happened in the dollar was the biggest advantage since the Bretton Woods exchange. And so I do think coming into that meeting in October in Russia, we're not going to look great. Our currency is not going to look great. And so they could decide to do a different currency. They do want to trade. The BRIC countries do want to trade within themselves more. That's, if you go to the website, you can look this up. Everything I'm saying is there. And it's on the agenda for them to discuss trading internally. They don't want to trade with us. They want to trade internally. Russia, China, India, they're doing deals. China, they're doing deals within each other. And there's 20 countries that are lining up to join the BRIC nations because they want that freedom and they want to get away from our debt. So, I mean, the more we lose that control in our currency, it does make it more difficult for us. And I think they know that we've become a casino here. We just continue to print and print. We've never been able to balance a budget. And so they're losing more confidence. When we became the world's reserve currency in 1944, our debt was, less than 1% of what it is today. So we looked strong. We were still on the gold standard in 1944. So we looked like a good, strong nation. Now we've spent too much. And so, it's concerning. They're quite concerned. So I think those things are going to happen. However, that affects the markets, obviously, as you said, if I knew I'd be a billionaire. But I do think that people are going to be moving into safer assets. They're going to try to keep up with just the day-to-day. And I think that there's going to be a lot of, what is it called on the stock, like a duck and cover strategy. I think we're going to see a lot of that happening where people are going to get out of things and just try to see, because we have lowering rates, you have the BRIC countries meeting, and then we have the election. So it's not a great time to have confidence in our traditional, markets. And only, fundamentally, if you just look at, our GDP relative to our debt, it's just not enough. So I think people are going to divest and get into different investments right now, and it's going to be a wild few months, an exciting few months.
Certainly. So, in terms of precious metals, obviously that's what you do, right? Noble Gold, and there's a lot of competitors, there's a lot of different places. I used to work in the not necessarily precious metals, but I had a scrap buying business. I was, buying over the counter jewelry and stuff because I understood the market, diamonds, et cetera. And it's complicated, right? There's a lot of competition, but in terms of Noble Gold, why Noble Gold, right? Like, I think especially for someone with an IRA or a 401k, because I think a lot of the people that are watching this show, they're smart. They've been saving, they've got money sitting in IRA, or, they're trying to look towards the future, not living paycheck to paycheck. But in terms of, Noble and what you represent, what's the strength that you would bring into that?
Yeah, well, I've been in the precious metals industry for almost 16 years. Before that, I was in commercial real estate. So when I talk about commercial real estate, I really know it, and I own real estate too. So I own, physical investments. This is what I do. Gold and silver is what I'm really focused on. I think at the end of the day, the thing that with Noble Gold is, and we always talk about this, is that we've built a family culture at Noble Gold. People that work there, most of the people that come in that work there are friends or family of, I can't even tell you how many cousins or brothers work at Noble Gold because they like working there. They feel good about what we're doing. We have an impeccable reputation, which you can check out online and look at our reviews. We really focus on bullion, coins, and bars. And that's really what gets the investor the most weight and the most bang for your buck. So that's really important to us. And because we do such high volume, we get incredible pricing, which we pass on to our clients. But I think the biggest thing is that we're around for the ups and downs of the market, and customer service is really the thing that we focus on the most. Is you're talking to a live person, they're here in the US, and they're going to be with you for a long time. If you read a lot of reviews, they mention people on our team that they built a relationship with. And that's something that we've really focused on. What I saw happening when I got into the business was there was a lot of misinformation. There was a lot of used car salesman type, aggressive selling, which we don't do. My customer service staff, average person has been on our staff for more than 5 years. The industry standard is, 1.5 to 2 years. So we've been able to keep people around because they really believe in what we're doing. And also many of them, I'd say almost 100% of them actually own gold and silver. They own these things. So they know what they're talking about. But our biggest differentiator, I think, is just the fact that we try to build relationships with people. We have age range of staff from 25 to my father, who's basically retired but is a bad golfer, and he still works and talks to people on the phone because he just wants to keep himself out of trouble, and he's basically 80 and Vietnam vet. And so we have all the different age ranges of people there, and really we like it, we love it, and we get to ship people gold and silver, and it's a very straightforward transaction. And then if they need to sell it, whenever they need to sell it, we'll buy it back from them also, and help them get out of it. But ultimately the biggest thing is just the relationships that we build. That's what we focus on.
And so looking at what's happening right now, if someone's watching the news and they're thinking, okay, if not, okay, right now, it wasn't Black Monday, right? We didn't see a massive, we didn't lose a quarter of the, the value in the stock market, but I think people can sense something is coming, right? That whether it's war in the Middle East, real war in the Middle East, or, stock markets, et cetera. So let's just say someone's watching and they've got a large portion of their money sitting in an IRA and they're feeling a sense of urgency. What's the timeline look like? I mean, I know a lot of times when you get into these things with IRAs and you're talking about weeks and weeks and weeks. And so what's that look like in terms of how streamlined is that process and how quickly somebody can actually pivot right now and say, look, I'm going to, get out while I can and move into something that's more stable, like, gold and silver. What's that look like?
Yeah. I mean, our paperwork is all, we can do it in 5 minutes and get your account set up. It's all through DocuSign, and it's very quickly. The only thing that I can't control is if Fidelity going to let you, liquidate your position if they're not up and running, which I can't control, if they're up and running. But if everything's in a normal environment, I mean, we do all the paperwork. It's very quick. We'll call the custodian with you on the phone. Sometimes the custodians, frankly, will try to make it hard, but we will get on a 3-way call with you and walk you through that process. I mean, they don't have any incentive to let you go, but we'll go to bat, and we have a full team. We run 6 days a week, so we have a full team that can walk you through all that paperwork. It's very easy. You could call and do everything over the phone with us. So we try to make it as painless as possible. Obviously, nobody loves doing paperwork, but a few signatures, we just need, the account number, but pretty much we can do the majority of it on our own without the client having to do much. And I would say, it typically takes, our typical account takes 7 to 10 business days to move over. Sometimes it's faster, depending on what it is. And then the only one, TSPs, the government accounts, do take a little bit longer because it's the government. So, there you go.
Of course. I mean, this right here, this little chart, this tweet, this to me, all these brokerages being down during this is like the number one pitch, regardless of what, even if you're just, taking your money, putting it into cash and stuffing it under your mattress. Sure. It's like, to me, this, if I had, I personally don't own any stocks, right? I got out of all that. And so I practice what I preach. I'm a hard asset kind of guy, whether it's silver, gold, or lead. It's like, I want it in my hand. Right. Yeah. But it's like this to me, it's like, if I couldn't log on to my E-Trade account to make a trade, cause you see what's happening, it's like, this is it. Right. So, well, we've got a page set up. So, Gold with Seth takes you right here. We've got this beautiful page set up. Folks can get this investment guide. So again, it's goldwithseth.com. There's a phone number, which is also 626-654-1906. That will be in the description. So say someone wants to come in here, they either fill out the information or they call, they get the guide. It's a pretty straightforward process, right?
Very straightforward. They're going to talk to someone on our team. They're going to spend time with them. They're going to spend time with them and walk them through and discuss, pros, cons, everything. You can ask any question that you have. And we actually prefer that you ask all the questions that you have so that you can get a full understanding of what we're doing. Because we know we're going to be working together for a while, and that's really important to us. And once the account's set up, when gold and silver shipped, we do something that in the IRA that nobody else does, is we take a picture of the gold and silver in the depository. We send that to you. No other company in the industry does that, because with your IRA, you do have to have it stored. It is segregated storage. So there's other things that we do that I didn't even get into that separate us. And then lastly, we've sold, in the last, 4.5 years, we've sold over, $2 billion in gold and silver. So we've done sold a lot of metal, done a lot of accounts. So we do have the track record. So if anybody's interested in just looking to learn, call us, and we're happy to discuss and see if it's something for you.
Awesome. Well, Colin, thank you again for giving us this time today. I look forward to next time. I'd say hopefully we have better news next time, but I have a feeling, say we hop out, in a month from now, I don't think that the discussion is going to be, wow, the stock market is soaring and there's no war and the election is looks like they're going to be counting every vote, accurately. And I think that it'll probably be the opposite, but I do appreciate the time that you've given us today.
Thanks, Seth. Appreciate it.
Absolutely. All right, folks, I hope you enjoyed that interview. I want to make just one quick statement as we round out today's show, is that I'm now working with Noble Gold, right? You probably made that conclusion through the interview with the CEO of Noble Gold. And a lot of you that have been following me have gotten used to seeing Kirk Elliott, and you're wondering, okay, hey, is there something wrong? Not at all. Kirk Elliott he's a good friend of mine. I talk to him all the time. And Noble Gold, if you've been with me for this whole journey, they were the original sponsor that I had brought on early on that really helped me get my career kicked off in this. And so I felt a certain sense of loyalty to them. I've kept in touch with Colin Plume, the CEO. And what's exciting to me, though, is that they're doing a ton of really engaging initiatives to educate people. So they're building an entire, almost like a university of education. They're putting together pamphlets and information. And I like a lot of what they're doing, especially as it touches the consumer. So I've decided to start working with Noble Gold again. Kirk Elliott, if you're with him, I wouldn't worry at all, right? I still trust him fully. But if you're still looking for how to make the right decision, Noble Gold is someone that I absolutely can recommend. Colin, as you saw in the interview, he's a great guy. He knows what he's doing. They've got a very successful business. He's very, very customer focused, and they do so much bulk buying. They offer very, very good prices to the end consumer. So I just want to clarify that yes, I'm working with Noble Gold now, but it's not because there's a problem with Kirk Elliott. Actually, Kirk is still fantastic. And if you're working with him, you're in absolutely good hands. So, but if you are in a place and say these past couple of days, the news cycle has made you worried and you're wondering what to go with next, I do highly recommend Noble Gold. So I'll bring up the website one last time. If you're interested in exploring this, the website is goldwithseth.com. Phone number 626-654-1906. And again, this is an example of what I was just talking about. You check this out, you get this instantly, you'll get this awesome gold and silver investment guide. This is part of their education initiatives. So again, goldwithseth.com, phone number 626-654-1906. Either call the number or fill this out, press get the guide, it'll get sent to you. And honestly, you are in very, very good hands. And I hope that this has been helpful with this episode. I don't want to be a fear monger, but I practice what I preach, right? I don't have money sitting in the stock market. For me, the money is right here. It's if I have any extra money, obviously I've got my food stores and in my brass storage, but this is the asset for me. So again, goldwithseth.com, and I hope you enjoyed that. So I'll see you folks next time. Thank you.